In India, real estate investments are considered as wise. And why not? After all, India is a developing country with growing population. Here, the demand for land is always more than the supply. So you're likely to enjoy some capital appreciation and a passive income in the form of rent if you invest in real estate. But the major problem in investing in real estate is that it cannot be used to mobilize your small savings. Obviously, you have to invest a big lump sum in real estates. Then there comes the problem in the management, in finding a tenant, then collecting rent. Then you have to manage all the legal formalities also. And don't get me started on the problems associated with selling a property. All this makes investing in real estate very challenging. And that is why, to solve this problem, you can invest in REITs. So what happens is, say for example, if I have 1000 rupees, I cannot invest in real estate. But if I find another 1000 people who have 1000 rupees, so together we will have 10 lakh rupees. Now with this 10 lakh, we can buy a real estate property, we can earn rent, and then we can distribute it among ourselves. If we ever sell the property, we'll again distribute the proceedings in all 1000 of us. So this is how REIT works. So REIT stands for Real Estate Investment Trust, where just as mutual funds, small savings of investors are pooled together, and then this money is invested into real estate. It is managed by experts. Whatever rent is received is given back to its unit holders. Thus, unit holders will have a regular passive income in the form of rent. It can be used to mobilize their small savings. They don't have any risk, or they don't have to manage it very actively, and they can also take advantage of the capital appreciation. So REITs are listed in stock exchange as well. So you can buy and sell in just a few clicks. And that is why we can comfortably say that REITs are a smarter way to invest in real estate. In fact, REITs are well regulated by SEBI, and that gives us good confidence while investing into these instruments. For example, 90% of the net income of the REITs are to be distributed as payouts to the unit holders. That means if you are holding a unit of any REIT, you can be sure that there will be regular cash inflows. Another thing is that in REITs, debt cannot exceed 49% of the asset value. That means we can be confident that management will not exploit on debt to buy more properties. And even in case of default, you'll know that the debt value does not exceed 50%. So rest 50% is meant for unit holders only. In India, we have 3 listed REITs that trade in stock exchange. Out of those, we are going to talk about Embassy Office Park REITs. So why we like it? First of all, the properties are strategically located in key office areas of our country: Mumbai, Pune, Bangalore and Noida. These are top performing markets with high entry barriers. Operating segments of Embassy Office Park Group are commercial offices, hospitality and generation of renewable energy. Now this REIT has a portfolio of properties of 45 million square feet, out of which 34.3 million square feet is completed and rest is under construction or is in the pipeline. This means that REIT has a good developmental pipeline. Now out of the completed properties, the occupancy rate is around 85%, which was over 90% in pre-COVID levels. And even now we can expect the occupancy ratio to improve as the workforce start coming back to office. The good part about renting of commercial property is that rental agreements are of long-term duration, which gives revenue consistency. Weighted average lease expiry, or WALE, for Embassy REIT is 6.6 years. That means on an average, around 6.6 years is left for the expiry of leases, which is a good term. This gives a good revenue visibility in the future. Now 47% rent is from Fortune 500 companies, signifying lower chances of rent default. Apart from this REIT has been given the highest rating by CRISIL, that is AAA, and the cost of debt is also quite low at around 7.3%. Now, one important parameter while analyzing any REIT is the net asset value. Just as mutual funds have net asset values, so does the REIT. After every 6 months, the properties of a REIT are valued, and based on that, net asset value is calculated. In case of Embassy Office Parks REIT, as in 31st March 2023, the net asset value per unit of REIT is around 395. These assets tend to appreciate with time as the value of real estate goes up. Now the current market price is around 300. This means that currently units of this REIT is available at a discount of 25% from its net asset value. So we look at the REIT as more of a dividend play in the short term and more of a capital appreciation in the long term. And these were the reasons why we have a positive outlook on the REIT segment. We consider Embassy REIT as a good investment option based on the location of the properties and the nature and the stickiness of the clientele. Tell us, what do you think about this REIT in the comment section below. Stock market investments are subject to market risk. Please read offer documents carefully before investing.